This is your Wall Street wake-up call. The S&P 500 and the NASDAQ shaping up to start the week at record highs thanks to last Friday's better-than-expected jobs report. For more, I'm joined now by Jasper Lawler, a market analyst with CMC Markets based in London. So Jasper, we crossed 2180 in the S&P 500 on Friday. Can we still call this a central bank-fueled rally? Because 255,000 jobs created in July, that gives the Fed more of a window to hike rates sooner.
Hi, Scott. I actually think we can. I think we're actually in a bit of a Goldilocks situation here for markets. That old favorite where the economy seems to be recovering in the US in Q3 after a bit of a lackluster Q2. And so that contrasted against the Fed, well, the economic data certainly looks better. They have the perfect excuse of the US election coming up and just the fact that the Bank of England eased policy on Thursday, moving more into line with the likes of the European Central Bank and Bank of Japan. It just means that the Fed, its policy to hike rates, that just puts an even bigger divergence against the other central banks around the world, given the moves from the Bank of England. And it's, to my mind, going to be very difficult for the Fed to set itself against every other central bank. It has been difficult so far, and I believe it will continue to be. And for markets, that's a positive thing. You've got the easy policy, but you've got the growth.
And one more point I'd layer on to your argument is that we're seeing the dollar gain steam today. And of course, we tend to see that anytime there's better U.S. economic data. And that is also a worrisome factor for the Fed.
Absolutely. They'll be aware that their policy, as I said, is diverging against every other central bank out there. The pound is obviously at its lowest in nearly 30 years. Likewise, the euro has been just lofting around at very low levels. And so the Fed will be aware that if it starts to aggressively hint at a rate hike in September, or even in one of the later meetings, that's going to cause some strength in the dollar when it's supported by this strong economic data. And that would be a headwind to some of the slightly improved corporate earnings that we've seen from some of the big multinationals in the US.
And so with that, you seem pretty bullish. If you missed the rally right now, is now a time to get in, or is it a stock picker's market? Is there more room to run?
It's always a nervy time to be buying at the record highs. There's always a sense, am I buying into the top here? But obviously for markets to go on the next bull run, it requires taking out that old high. And so I think there's a few reasons to be supportive of the market. We've seen oil hold above $40. So I think we're escaping that global economic growth concern that was gripping us in the early part of the year. And so oil above $40 and the central banks looking easy and growth picking up, I think there's enough there to justify not only not a sell-off, but actually a continued move higher.
Right, and we could even get to 2,200 shortly. We're pretty close to that in the S&P 500. All right, Jasper Lawler, a market analyst with CMC Markets in London. Jasper, thank you.
Thank you, Scott.
I'm Scott Gamm, and you're watching The Street.